Morning, everybody. Welcome to your inner circle session for tonight. I hope you're well. I hope things have been good on this Wednesday for you. Let me just do a little bit of a shift. It's long got used to this mirror image thing. Yes, I'm delighted to see you all here. And we've got something a little different to do today. We'll do our regular meander around markets, of course, but on top of that, what we're going to do is we are going to just give you a little plan or a little process, perhaps is a better way of putting it, in terms of leveling up a little bit. There we go. I just need to turn myself down on the checking thing. I'm guessing you can hear and see me okay today. Just drop me a little message or two if you're good to go. Right. Okay. So let's rock and roll with this, and obviously we start by just popping up this little disclaimer, and obviously this is for educational purposes only. Please make sure that you do your own due diligence on anything you see here. Make sure that you follow trading plans. Make sure that you manage risk on every trading action, consistent with your own personal objectives and financial situation. We're going to start by just having a look at some charts. G'day, Sunny. Good to see you here. Thank you very much for the heads up on the AV to Wayne and Sunny. Really appreciate it. There we go. We've got charts. So we're going to start by looking at, well, it wasn't intended to start by looking at the Euro Yen, sorry, the US Yen. I meant to start by having a look at the index, namely the Nasdaq, which continues to surpass all issues that the market seems to be throwing at it. So the big things going on this week, obviously we had a CPI number, which was really quite warm and was quite worrying, and maybe Trump's tariffs are starting to have the inflationary effect that people predicted they may. We'll have a look at what that's done to the Fed's expectation or the market's expectation of a Fed rate cut in September, which has been pushed back from June, then to July, then to September. And around about a week ago, it was just a little over 60% likelihood that a rate cut would happen. Then we got this kooky number going on, which nobody sort of expected really. But you can see there's the candle where it came out. Interestingly, the market was very odd when it came out, as those of you who were on the session last night will have seen. But then, of course, we got normal service resumed, and that warm CPI number resulted in the US dollar shooting up through any reasonable resistance. And you can see there now we've got a sort of rounded bottom type of formation. We're potentially looking at this level here for a technical importance. Gold, however, didn't sell off significantly. It sold off a little bit, but we're still sort of mid-range, still kicking around this as we are now, around about 3339. 3360 is the key level to keep an eye on. If we look at the action today, you can see we had that sell-off in response to the USD strength, but during the course of the Asian and into the European session, we've just had a little edge ever higher. I'd probably put a line here, actually, as a potential line of interest. You can see how it was support here, around about 3342, and certainly a move up to 3350 might be on the cards, and possibly even up to that 3360 level I've just referenced. Let's just take a check on the impact on the chances of a rate cut. Maybe we won't. Let me just do a little flick around. Let's see if that's... Yep, there we go. You should see it on your screen now. Just coming on. A little bit of darkness for a second or two, and then it should appear. Hi, Sonia. There we go. So, as I said, it was 60%. But you can see it's not 60% anymore. In fact, it's dropped even more today during the course of the day. Was up around about 53, but now we're just 50-50 almost in terms of a rate cut of 0.25% in September. That's quite a radical change. If we just look down the bottom of this, you can see here that um, a week ago it was actually 65% chance. So more than two-thirds, and now we're at half. So the chances of that rate cut are going to be a little stretch. We're already getting Trump and Vance putting on messages to the Fed to cut rates in July. That's never going to happen. If we look at the July meeting, which is on the 30th, you can see here around about 97.5% chance. So expect that narrative to ramp up to social to get a bit of a battering from Trump's fingers accordingly. If we look at the impact on the futures, you can see the futures are a little bleak. Not dramatically so, but obviously the other thing in play is US earnings. And we have quite a few. If you want the best place to find earnings is Yahoo Finance. So you can see there we've got Bank of America, Johnson Johnson, Goldman Sachs, Morgan Stanley, some of the big banks reporting. That's nice. They've organized it by market cap. So yeah, it's still very much banking. We've got United Airlines as well of interest. And none of the big tech boys today. We've got Alcoa coming out as well. So quite a plethora of earnings to come out from the banking sector and a couple of Dow components as well. If we look tomorrow, then again, I'm expecting it there. TSM are interesting. And then we get the first of the big tech companies. After the bell, it'll be. Or with Netflix, we've got GE coming out as well and PepsiCo. So quite a busy few days, even though it's just the start. And then, of course, next week we'll ramp up. So just watch things over the next few days. Netflix may well set the scene for big tech. The expectation is that we'll get a good growth number from earnings, but the forward guidance is a little bit of a concern. I would suggest, as those of you who were on the last bar yesterday will have surmised. So anyway, that's where all of that is. Let's go back to charts and just check out what else we can see and see if we can find any opportunities. So if we pop onto copper, which of course was on a tear after Trump's 50% tariffs on copper, which come into effect on the 1st of August. That was the candle here where now everybody's buying copper at this record level because obviously it's going to be a lot more expensive for the US to buy. Subsequent to August the 1st. It'd be interesting to see how Freeport do, who are obviously the biggest copper producer in the US, may even be worth a nudge, but had a drop off yesterday. So you can see that enthusiasm isn't through the roof at all on Freeport, and you would expect it to be so because they're going to be an obvious beneficiary of not having to pay the tariff. Because they produce it. So interesting that that's it did have the initial spike, but interesting that that's just slow a little bit. If we look at some of the other asset classes, let's look at oil, and we talked about this level yesterday at 67. We breached that, and we're actually following through on that. We did test this level now at 66.52 earlier on in the day. Sorry, towards the back end of last night. Let me put it on the hourly chart so you can see it. So really, since the European market's open, we've seen that sort of breach of this level here, which is the low from yesterday. We're playing with that now. We follow through on that. There could be $1.20, $1.30 in a short gold trade. And then, of course, there's Bitcoin, which after smashing through record highs the previous day, got up as high as 123, somewhat amazingly, before pulling back. Now we've got a range created between around about 116 and 120. We hit the bottom of that range yesterday, but today we've seen buying. Looks as though a retest is on the cards of 120. Quite remarkable from Bitcoin. On to some of the FX crosses. US yen really after yesterday's enthusiasm, which you can see at the back end of the session, following that CPI number, you can see we've sort of found ourselves in a little bit of a sideways range there. FX has been pretty flat today overall. Again, you can see that US dollar strength last night versus the euro. And then the subsequent bounce at the back end of the session into Asia. Now we're in a sort of range here between about 116 and 116.28. So not much of a range at all, to be honest. But that's still too actually nearly 3 ATR, so that is quite a range. So just watch for a breach over here. At this stage, it looks as though it's going to drift back downwards to there, so there is an opportunity there of around about 16 to 17 pips, perhaps. Um, there seem to be, outside of that, the major mover today appears to be the weakness in the Kiwi. And the Kiwi Euro looked like an interesting chart when I was having a look at it before the session at around about 195.67. Just take this out a little bit and you can see how significant this level is. Um, really since the beginning of July, maybe push that up a little bit to 195.77, but really what we're looking at is a potential move higher from this point and possibly a test of 196. Look at the GB pound Kiwi. We do actually have a break of a level that we've been trading under for a little while. I'm just going to change the color of that line if you don't mind, from orange red to a slightly more visible blue. There we go. 225.38 was the level. It was the level here as well. Quite a lot of price consolidation around here. So looks as though we're on the move to the upside, but that move is possibly limited to around about 34 or 35 pips. It still looks interesting nevertheless. Outside of that, there's very little price movement going on. Maybe the GB pound Swissy is worth a look. Swissy quite weak in after a sort of fairly strong start on sort of to the beginning of the week. We can see there now we've got a resistance level which has been tested the last 5 days essentially at 107.40. A move through here could see us up to 107. 107.80. So that's a nice 40 pips there. I quite like this as a chart, I have to be honest. There could be the potential to pause around about 107.60, so around about halfway up. But we look as though we're testing this right now. Certainly the last two candles suggest that this could be good to go. Let's just check in on the Euro Swissy as well. That doesn't look quite as attractive. Still some distance to go before we get some clearance. So I'm going to make my FX chart of the day the GB pound Kiwi on this breach. It seems to have done pretty well. And as I said, I could see this up to sorry. Did I have another candle up here then? Was it just shot up? No, it's not just shot up, but we are certainly in trend continuation on this. 25 or 24 pip move up to that level. I think that looks like a pretty clear trade in happening right now. And just watch the US yen. If we do breach 158.59, there's obviously plenty of, if we start to see some US dollar weakness, there's probably quite a few charts that are looking a little bit like this, but the US yen is very clean in terms of that. Quick flick through some stocks. Quick couple to look at the ASX. We'll obviously got our live market update tomorrow. DPLO really strong movement today. 183 was its finishing point. That's its high ever. Or its high since I don't know, May 2024. Very strong close. Very technically strong. Just Let's just have a look at Paladin while we're here, which is also up 3%. Paladin's got a slightly clearer picture in that it's got $8 is the level there to get concerned about, and then a possible move up to around about 860, 870. So a nice sort of 7-8% potential move to the upside. Keep an eye on those. LYC just stalling at $10. So had two attempts to breach it over the last 2 days and has just pulled back a little bit. So keep an eye on those three. And Megaport, we'll see where this is tomorrow. Around about 1450. If you're popping back here, then that would be good to see here, obviously. Into the US, Nvidia on news of a good deal with China. Nvidia continue to powerhouse to the upside. This is what the futures were showing yesterday when we're doing the next bar session. So they didn't move up really from what was predicted in pre-market trading. Pretty flat today. Tesla just appears to be sort of bimbling in between around about 300 and 330. Nice 10% range it's trading in now at the moment. And AMD were another one we're looking at again. Failed to move any higher than its pre-market condition yesterday. A little bit down in extended hours, but this is a good move from Nvidia. Watch 160 for a potential move up to 172-ish. Okay, so that being done, let's get on to the order of the day and look at what we're going to chat about today, which is a 2-week trading challenge. And from this, there are 3 key aims. First of all, course, there is to build momentum. If you make changes to your trading and you get into the habit of doing it, then it becomes easier to do the next thing and the next thing and the next thing. Sharpen your edge, so make those trades that you're making a little better, and of course break through any plateau that you have in your progress stroke development. Those are the 3 aims that this 2-week trading challenge that I'm going to throw down like the proverbial gauntlet at your feet to try and make a little bit of a difference. I mean, it makes sense to start why most traders get stuck in some sort of rut or plateau and don't seem to move forward particularly. And obviously, we're moving past the basics of actually having a plan to trade here. We're assuming you've got a plan in place, some reasonable strategies that you've tested over time, and that you sort of do okay. But you may be sort of, particularly over the last Trump volatility-induced nonsense, you may find it difficult to make money. Certainly, some of the EAs have struggled a little bit, but most have held up sort of okay. So it's the same deal, really. So it could be that we're chasing the perfect trade setups, but missing the consistent habits for the life of a trade. So what that means is we're still focusing on entry. We see a really good looking setup. I've just written an article about this today, actually, which could be interesting to you guys who do automated trading about starting with exits. As you start point and then looking back and picking the entry from there, which is an interesting reverse engineering thing. So I thought I'd write something on that. But the focus is always simply because that's how we've all been trained. It's what we hear on every YouTube video about this setup and that setup, and this one's going to make you a gazillion dollars. This one's going to give you an 80% win rate. We all have heard that. But really, it's beyond that we make our gains. And we've talked a little bit about that. But as we fail to, or as we feel as though we're failing to make any progress, even though sometimes in some markets, the ability to not lose money is progress for many. Because there are some markets which are just difficult. But if you can hold your own in them markets and be ready to go when markets change again and offer some more opportunities, then that's a result. But we sort of start to get a little panicky maybe and just forget about the things that really sort of matter after we're in a trade. That's and then of course the other thing that happens if things aren't going quite the way we wanted is we start to overthink it rather than just sort of saying right criteria A B C D E are met for entry and I'm going to go X Y Z for exit. Um, we think about E, F, and G, and we think about R, S, and T. So we just overthink every trade, and by the time we've done that, we've hesitated or even talked ourselves out of a perfectly good trade. So we end up underacting. So it's the reverse, if you like, of being overconfident. We sort of have a little bit of a nudge at our confidence, and then again, and all of a sudden we're not taking trades which really would do us okay. And obviously, if you haven't got the right infrastructure in place, so no review system, no development system, no feedback, no progress. That's the way it works. So it's a combination of these three things, particularly when markets are a little tough, when most traders get stuck. And the temptation is to add more. We can add additional indicators, additional strategies, but rarely, if we're not doing the right things on a consistent basis, rarely is that going to make a difference. So the way you fix that, of course, is to refine what actually matters, what actually makes a difference, and you do that consistently. So that's where the 2 week 2 week challenge came from. And so what I'm going to present this morning, or sorry, this evening, is the power of a focused 2 week sprint. There are reasons why I've made it 2 weeks. In primarily because it's short enough to commit to, but it's long enough to make a difference. If I said it was a 3 day thing, then it's not likely to make a massive amount of difference. If I said it was a month, then you would think, oh, or 28 days, you'd probably get to day 6 and think, oh, whatever. So this was the balance that I sort of came up with um, to try and make a difference, to try and get you to commit to something that I think could be very powerful for you as an individual trader. And if you like, the idea of it all is to build those habits or renew those habits that traders talk about all the time, that you'll hear on these sessions all the time, but rarely master, or simply let go. Because of course, if we don't get the results that we perhaps got 6 months ago or 9 months ago, we might start to think, well, that doesn't work. Our enthusiasm for being consistent, for adhering to plan, for believing in what we're doing starts to diminish a little bit. And so those good habits that we have in place may also start to diminish. So it's to reinvigorate those great habits and start to see a difference again. And create this loop of action, reflection, improvement, action, reflection, improvement. There's no point in measuring stuff just for the sake of measuring. It's one of the things I always used to ram home when I was talking about trading journals and performance measurement is you don't just do it for measurement's sake. You do it with a purpose in mind. And the purpose is that you take that information, you create an action plan, implement it into your trading remeasure. And it's that sort of loop that goes on. And that's what we're wanting to try and create with this 2 week of deliberate action. And I think it can change everything from where you are now. Not only because of what you're going to work on in 2 weeks, but the momentum or the re-momentum, if that indeed is a word, that doing a project like this could enable you to do. So if we look at the three factors that can level up your trading, they're really sort of come about in terms of if we master these, then you're more likely to get that last intangible difference following. And the first of these is clarity. So know your purpose, your setup, your risk, your edge. Know what you are, know who you are as a trader, and stick to that. Don't go trying the next new thing and the next new thing and the next new thing after that. Focus on what you are doing, but make sure that you do it well. And part of that, of course, is establishing consistency. So executing without deviation from action and do it at the right time. Don't wait an hour. Don't wait 2 hours. Don't wait 4 hours. Don't wait an extra 5 minutes. If you are consistent and it creates great results, then all of a sudden you're going to start to get belief back in your system again. And this goes with EAs as well. Um, if you focus on what you should be doing in terms of doing that back test or putting something live or retesting something that you've tested before just to make sure it still works or validating the work somebody else has done, then all of those are about executing what you have to do when trading EAs. And of course, reflection or measurement, reviewing continuously improves things big time. So review continuously, improve big. I've gone for the statements in this presentation, as you'll see. So those are the three factors. So what I'm suggesting is that, or what I've tried to do with this 2 weeks uh, is focus on those, on improving and mastering those three things, or reinvigorating those three things. So, having given you the preamble and a little bit of the rah motivation sort of component, let's get into the nitty gritty. What is the challenge that I'm throwing before you? So it's 10 trading days of precise focus on specific areas of your trading. So each day will have another specific area to look at. So you're going to have a clear daily task plan and structured reflection, evaluation, and action planning following it. So, in terms of your commitment to this, and why wouldn't you? Then there'll be a period during the day where you do something that's absolutely focused on your trading. And again, there's no reason why you can't develop a plan that relates to EAs if that's what you're doing primarily, or if you're doing both, a little bit of discretionary, a little bit of EAs. If you're doing just discretionary, then that's fine too. It's all good. Of course, one of the first things you need to do is ring fence the time to make it happen. So give yourself a slot every day, whatever time that is. If you write it down, it's more likely to happen. Get yourself a little planner. Get yourself on an Excel spreadsheet and say Monday, Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday, and then put in the times that you're going to do and the time that you're going to finish. And I'm going to give you what you're going to focus on a day by day basis, if that makes sense. I was thinking about how to make this easier. You could, if you're trading multiple strategies as a discretionary trader, maybe it's a good idea to have one strategy as your lab, if you like, the sort of test area. Because if you do the right things with one strategy, the chances are they're transferable to others. So you can provide evidence that if I do A, B, and C for strategy X, then doing A, B, and it works, doing A, B, C for strategy Y is likely to work as well. So perhaps that's an approach to take to make things easier. Spend your weekends, just invest a little bit of time in reviewing what you did and resting and enjoying the life stuff and all that sort of jazz. So I'm not going to get you to work for 2 weeks solid. I'm going to give you the weekend off. And as I said, if you can invest, let's say 45 minutes or an hour a day and commit to that and follow through on that and do what you have to do for that time in a focused um, and serious way, then I'm convinced that it'll make a difference. The reality is that if you have the power to make this happen, or sorry, the reality is that you have the power to make it happen. If you really want it enough. If you don't want it enough, if you just want to play trading games, that's okay. My guess is that most of you on here are going to be in the particularly the have made the effort to get onto YouTube rather than having using GoToWebinar, and I'll have words about this. But my guess is that most of you here are in that bracket that says, "Look, I'm serious about this. I want some good stuff to happen." So what I've done is I've developed a timetable for you. Now, this is suggested. You can adapt it. You can adjust it. Um, but what I've done, I'll leave this up for a little while so you can potentially screenshot it. Those of you that are part of the Discord gang, I might actually, if you want me to, I can post these up. And then some enlightened individual can have a look. And maybe this took me ages to do. Okay. Actually, by the way, um, some enlightened individual can possibly put it in an EA context if you want. So what I've got here is a focus about what you're going to do, um, a tagline, the rationale behind it, and some practical action. So, for example, week one, it's about intentional planning. It's about making sure that you're planning things properly. So define your active hours, validating the setups you're using. Um, so almost that sort of pre-market setup stuff. But you're going to make sure that that's tight as a drum. Um, and what that does is it reduces the chance of you trading on a whim. If you know the setups you're going to take, and particularly with this, where we maybe focus on one strategy, or you maybe focus on one strategy, then it could be that um, you really, really nail that down, or just make sure that it is as it is, and all of those things you promise to do as part of your daily agenda at the start of the day. So things like I'm going to check the economic data. I'm going to have a look at it. I'm going to have a look at some charts. I'm going to pick the top three that I think are going to work. And this is going to be my potential entry in the same way that I do, in the same way that I will pop up a chart and say, right, if this happens, then that looks like a potential entry. There's no reason why you can't do that. Pick three that you like, and then even set notifications up on your MetaTrader platform. Then we need to take that to the next stage on day two. And I want you to start to have a look at those trades that you took that really worked well. What was the difference between those and those that didn't work well? That's what we're trying to find out with setup precision. So we're trying to filter out those trades which come see, come sa, maybe a little bit reactive, maybe looks as though it could have potential, but not the real smash it out of the ballpark setups. Um, so go back and have a look at some of the trades that you've taken, invest some time in that, and look at the ones that gave you the best results. Go and have a look at what was happening when it entered. Is there anything there that you can see that you should be doing on a regular basis, and can differentiate between those high probability with medium probability trade setups? Wednesday is emotional awareness. Um, I want you to start to document, particularly. This is difficult to ring fence a particular amount of time. It'll depend on when you're having a look at the market. Um, but I want you to start recording how you're feeling. What's going through your head? What's your thought processes leading up to a trade entry and then subsequently a trade exit? And I want you to document that. Or you can just get your phone and do that record thing and play it back and make key notes out of that. Thursday, I want you to focus on risk. And then Friday, I want you to have a look, review your trades from the week, identify the best and the worst. And again, it's all about this review and feedback. What was the differentiator between the best and the worst? Of course, maybe the best is not the one that made the most money. Maybe the best is just getting out at the right time before it absolutely capitulated. That sometimes is the best trade. So have a look at that. As I said, I can post these if you haven't had a chance to screenshot. Moving on to week two, looking at trade timing. What I want you to do is to be critical about the trades that you've taken and that you're taking, and look at, did you enter at exactly the right time? Or did you delay a little bit? Or you a little bit of an itchy trigger finger thing going on? Why that might have been. What was it that created that delay? And were you justified in delay? or were you not justified and you ended up missing out on a chunk of potential profit? So most of the things we've looked at to date have been to do with entry, but you know what I feel about exits. The right exit turns a good trade into a great one. That's what we talked about last week. Um, and I want you to rate your exit after every trade. Why did you exit at a specific point, and what happened next? Um, Wednesday, I want you to look at your setups and look really more so at the trades you don't take. And I want you to deliberately, if you don't think something is a really strong setup, but nevertheless ticks your criteria on your plan, I want you to actually not take that trade. Even if you desperately want to, document why you skipped it and look at what created that desire to skip it, and then what happened next again. Is it something, if you really, really focus on filtering, did you check those other time frames? Is that something you do regularly? Did you check um, whether it was overbought or oversold? Did you check um, what was coming up in terms of data? Did you check the proximity of the next swing high or low? And if you see any of those things happening, don't enter it. Don't enter it. Because what you could find out by doing this is potentially another filter that would be useful. If you then do your reflection on that and say, well, actually, that was a really good decision, then you can go back and apply that exact filter to 4 or 5 trades before, perhaps those ones that didn't do particularly well, and see what would have happened if that filter had been in place. Thursday, I want you to focus on your daily agenda. I've already referenced that already, and it's a subject that I've talked about before. What's your trading routine? Did you follow your pre-market prep? Are you having a look at the right things at the right times? And revisit your agenda. Are you looking at everything? I'm not doing a live update every day. Are you doing the same process in terms of preparing yourself appropriately for the day ahead? So check in on that routine. Make sure that it is robust. And of course, not only prepares you for what's coming, but from a knowledge and information point of view, but puts you in the right trading state to say, right, this is my trading day ahead. This is what's going to happen. And that may be I'm not going to do anything. That may be today's the day just to put my toys down and go and play somewhere else. And then the Friday of the week too, I just want you to do a final review. I want you to review how you've done over the 2 weeks. Highlight the key improvements, the key learnings, and action plan and put into place those habits you're going to carry forward. And then let's see where you are. It's really that simple. You prepared to commit to that or not? And if it works, of course, you can do the same exercise again. It's not something I would do every day, forever and a day. I think it's something that you maybe do every quarter. And you can get more and more specific. So when you're coming up to the next 2 week level up period for you, then what you do, whenever that may be, then what you do is you do exactly what I did there. What are the key 10 things or 9 things? And then you got your review and your action planning on the final day of it all. It doesn't even have to be Monday to Friday. It can be Wednesday to Wednesday, I guess. Um, but once you've done this once, it's going to give you a strategy, a tactic to create those things, to put those things in place that are going to support the trader you want to be. And if you do it, if you follow through and it makes a difference, the desire to do that again, the motivation to follow through on that again are going to be that much higher. You're going to lose nothing from doing this. Nothing. But the potential gains are significant. This could be your turning point if you want it enough. But then again, that's what it comes down to. Hey, do you want it enough? So, ladies and gentlemen, that's what I was going to share today. I hope that's been interesting. I hope that's given you some things to think about. And I thank you for popping in and sharing this time with me. It's always a pleasure and a privilege to serve. I will obviously you can access this video afterwards. I'm sure you've already discovered that by just clicking the link again at some stage in the future. Um, what you could also do, of course, is check out, for those of you part of that, I think most of you are, check out the TRQ Discord channel, and I'll post that week 1 and week 2 in there if you really want it. And you're not part of that group, you can ping me an email at mike.smith@gomarkets.com, and I will flick you those 2 weeks through. And even if those aren't your exact things that you do, I'm hoping that um, might be. Oh, you're a superstar, Wayne. Thank you. There we go. I'm hoping that might be something that you may uh, be able to use and develop yourself, fit your own particular trading style, and yeah, go for it. Make it happen. Get serious and level up. We'll see you again very soon. Thank you, everybody. Enjoy the rest of your evening. We'll catch you again very, very soon. In fact, tomorrow lunchtime. Um, in fact, what I might try and do, I'm going to try and do this. I'm going to, just in case you have struggles. I'm going to try and post the. I'm going to try and post the links that you've got handy into. We get the right one. It's the 17th tomorrow. Right. Okay. And then I'm going to go back into here. Oh, this is a bit of a. Right. I'm going to post the link for tomorrow. So just there we go. Um, you're welcome, Ellis. So just keep that link handy if you just have struggles getting in. But if you pop back, what I would do is you'll see a notifications button, hopefully. You click on that and you should get a message on your phone if you've got a YouTube um, account. Otherwise, we shall see you again very soon. Enjoy your evening. Thank you very much. Bye bye for now. Very safe.